Good morning, traders. I want to visit with you guys about a couple of aha moments I've had in the last few days. One of them, of course, was the set your limits, set your personal loss limits on a daily basis for it to lock you out, so to protect you from yourself. The second one is a statement I made back in September. I was trading so well, I couldn't figure out any way that I was going to blow an account up again. But I did find ways to do it. But what I want to talk to you about is the trading strategy that I was using. I watched a video with Trader Kane, and he just said, "This is the strategy I use." And that's what I was using. It's just reversal or continuation. And that's what I was using. I got 2 accounts funded in September and then somehow lost my mind and forgot how I got there. So I'm going to go over that with you. This is actually a trade that happened on Wednesday. I was working that day, and so I wasn't able to sit in front of the charts. But on one of these reversal or continuation type trades, this is the opening candle. This is at 9:30 in the morning. I'm going to blow this thing up to where we can see it better. This is a 9:30 a.m. candle right here. Very first one of the day, and we mark out the high and the low of that candle. Now you can see it came down and it failed to take this low. So to me, that's a target right there. Look, there's got to be some liquidity there. And then we come up in a very ugly fashion and we come and we take out the high. What I had done, because we didn't take that low, was I put, and this is already at 11 o'clock, 11:30 candle right here. I put an limit order to go short once it clipped this. I think I put it at about 405. And I went short there. And I just I believe I aimed for the low of these candles. I may have taken it all the way down to here. But I wasn't able to watch the chart, so I probably took the lower hanging fruit. But as you can see, once we took that, we came back down. And that's what you want. Now we get here to lunch. We've taken this low. If we scroll back over to this direction, we've taken these lows, left these, but once we took this nice, clean, straight line, we went right back up. Oh, man. And that's another reversal trade that you can take. And this one occurred, this is the 12 o'clock candle, 12:30. So this one's at 11. The rule is if the market hasn't reversed by 11, it's probably not going to. Well, we haven't had any direction here. We've just had chop. So you don't have to worry about that rule. So we come out, we fall down, we take out those nice little straight lines, and then go back up. Both of those trades were viable that day. And this is on a 30-minute candle instead of a 15, but you can do it on either one, but I would not do it on a smaller time frame than that. Next, we have the previous day. That's the reversal trade right here. Previous day, we fell out of bed. That's not even the previous day. One thing I want to say before I move on from this. After you have a big move day, this is the price action you will typically see. The market will consolidate and it will range from top to bottom. This is a really nice range. That opening range candle was 160 points, so that's a lot of movement, and it will typically do that. It'll range from high to low. Next, we come over here. This is the day we fell out of bed, was right here. our opening candle at 9:30. We fall out of bed, take out these equal lows, start aiming lower for those equal lows, but we don't make it. We come down, we take out this low, we leave these, we leave all those. So my bias is definitely still short because we've left some really nice straight lines down here. So we're at 9:30, 10, 11, we put up this, or 10:30 candle, we put up this really nasty wick, make an attempt to go up. Now we're at 11. If the market has not reversed by 11, chances are it's not going to. So we wait for that run up. It attempted to go higher, failed. We sell short here, and we aim for a swing low. Now, I would have probably been aiming for something down here. I'm not sure where I would have been aiming, but you can see it took out that wick. I probably would have just gone for a low-hanging profit target, something like that, like maybe the base of this one, and that would have got me a new low there. That would have got me a decent profit. Is that if I got in short here at the NWOG and I put a take profit there, that's 140 points. Even with micros, that's a decent profit for the day. So that would be your continuation trade. The market has not reversed by 11. That means we're not going to have a range day. So we look for a swing high or a swing low, depending on which direction we're going, and we sell into that. But you don't do it on a continuation like this. You wait for that retrace back up. You could even have gotten in here. This is at 1 p.m. Wait for the retrace back up. Wait for it to fail. I thought when I saw this, it was going to the NWOG, but it didn't make it. So I was like, okay, we got a continuation day. We're heading back down. So anytime it's going to range, it'll usually do it by 11 or before. And anytime it's going to have a continuation, we should see it continue at the 11 o'clock hour or the lunchtime hour rather than come all the way back up and try to take out these highs or even get into this range at all. So those are the two things I was doing when I was doing well. And then I'm going to continue to do. Plus the other thing, Trader Kane, I was listening to him, and is the daily loss limit. Set a daily loss limit, stick to it. That's to protect you from yourself. Even professional traders that have been doing this a long time, like Trader Kane, they have to put those limits in there. If you didn't see my last video, I'll show you again. Here, you can set the number, you can set your lockout, a personal lockout. You can set, I've got it on the practice. Let me put it on the combine. So over here, you can set your daily loss limit, whatever you want it to be. This is a 50K combine. I don't want to lose more than 200, I wouldn't suppose. And I'm going to lock myself out if I hit that $200 loss. Another thing you can do is maximum trades per day. I don't know why that's there. I'm going to do 2. Oh, that says 5. I'm going to do 2 because that first trade that I take, there's a possibility you could have an early entry, but that first one I take, I want it to be profitable. And if it's not, I'll give myself one more chance, and that's it. So there's 2 things you can do, and you can get it to where it'll lock you out all day. So like New York session, if you have a bad trade, say it locks you out for 15 minutes, 30 minutes, or all day. But once you do those 2 trades, you want to lock yourself out. And I don't, yeah, all day. Let's see. Yeah. My little ribbon down here at the bottom won't let me, for my recording, won't let me do this. Oh man, won't let me clear that screen. But that's the essence of it. You set it up, you lock yourself out after a couple of trades. That's what I've been doing lately to blow up my account. Is I might take 10 losing trades in a day, and then I'm done. Brand new combine, a brand new XFA gone. So put those safety limits in place. Lock yourself out after a certain number of trades. Lock yourself out after a certain amount of loss, because some days you may not be reading the market right. Or maybe you are reading it right, but you just got a bad entry. Don't keep trying. Wait, live to trade again another day. They say trade for tomorrow. That's what I recommend. Remember to be kind to yourself and be kind to others. I love each and every one of you. I appreciate you watching my video. YouTube refers this to other people if you like, and subscribe. So if you don't mind doing that, I'd appreciate it. Share it to somebody you think might be able to use it. Talk to y'all next time.